So I was in a classroom. There was 3 or 4 students. It's like right before class formally begins and everything. One of the students kind of chimes in and says, "Oh, you know what? We don't need to know anything about those accounting stuff and all those dollars and things. I got a whole floor of accountants that kind of work with us, and they kind of knock everything out." And another student said, "Whoa, but partner, I kind of hold up on that because one time I did that, and boy, did I get in trouble at the end." And the third one said, "Yeah, I think we need to do a little bit more about those dollars." Of course, I was sitting in the back and I was kind of like smiling, saying, "Oh, yeah, we are definitely going to talk about the dollars." So hang on. Let's talk about money. Let's talk about budgeting and how it can help you as a project manager. In the meantime, thank you for joining us on this episode of John the PM, where we believe that managing projects is not just a job, but a way of life. Budgeting. So if we know all of our project management materials, basically you got to estimate costs and then determine budget. Estimating costs is really looking at each of the work packages. In layperson's terminology, it's just really kind of looking at each of the deliverables and saying, hey, how much is this thing going to cost? The total delivered cost. Then by definition, you're going to take that cost and spread it over some period of time, and that really becomes your budget. So let's break this down in a couple of things. We're going to talk first about the cost estimate, and then we're going to talk about the budget and which part you as a project manager really should be most concerned about. But before we begin that, I want to give you one big word of advice. And this is, well, I said word, but really I meant phrase. This is what you need to do on the front end of every project. Make friends with your financial accounting team. Make really good friends with them. Why? Because they will help you out. It is in their absolute best interest to make sure that everything is straight on the front end because they know they're going to have to straighten out everything on the back end. A lot of times there are an underutilized resource. Sometimes people see them as somebody up on the tower to say no. They got their green spectacle glasses and all those things. Sometimes they speak up, sometimes they don't. Whatever may be the case. The very first thing I would do is make really good friends, engage them on the front end of the project. They may have some thoughts, and usually those thoughts are not to tell you what to do relative to your project. It's your job to run the project, but some thoughts as to how to make it a little bit smoother for everyone when it comes time to close out this project and actually get paid for everything. So let's kind of break this down in a couple of parts. The first one is going to be your cost estimation. So let's just use as an example, you're going to have some work done at your home, okay? And it doesn't matter. You're going to renovate a bathroom, you're going to renovate a kitchen, you're going to put up a new fence, you're going to put in a patio, whatever that piece of work is, okay? That work package, we're going to call it that for now. You as the homeowner want to know from the contractor, how much is this thing going to cost, the total deliver cost. A total deliver cost, we truly mean everything, taxes, insurance, financing, how much is the total cost? Now, I want to break that part into two parts. One is if you're doing all the work, and then two, if you're actually subcontracting. If you're subcontracting or outsourcing, it's usually pretty straightforward, that total cost. If you're actually doing the work yourself, honestly, I would make sure I put in my own labor. So if you're going to put up that fence, renovate that bathroom yourself, cook the dinner, you do need to factor in your time. In a small business world, that's called economic profit. And honestly, a lot of people, when they're actually doing work, they forget to value their time. So if you have if you're doing the work and it's going to take you 20 hours, have some multiple, whatever you think that you're worth. Now, let's just say $20 an hour, just to kind of keep the math simple. So if you're working 20 hours on it, you're charging yourself $20. It's $400, 20 by 20. So that's how that would look. And honestly, I would factor that in. Now, why would I factor that in? Because I would look at that labor, that sweat equity, sometimes that we call it, and ask myself, am I better off to outsource it or to do the work myself? Normally, what will happen is that if you have more time than money, you're going to do it yourself. A professional setting, again, like in class, what I would ask people to do is to kind of factor in, really, do you want to be in this business? If you want to be in the business, you're probably better off doing it yourself. And if you don't want to be in the business, more than likely you are better off actually outsourcing it. There's a lot of detail that we could certainly unpack. We're not going to unpack all of it, but hopefully it just kind of gives you a gist. Why did I attack the labor portion? How much your time is worth, because sometimes that's the hardest part. Materials cost is pretty straightforward. It's just whatever it costs to buy the materials. So your estimate is going to be labor and materials, or some factors thereof. So that's going to be your total cost. Now you may ask, John, why do I need my accountants to be involved if I'm just doing that? Well, part of the reason why is because you may have some things that are working, such as direct costs and indirect costs, and really kind of understand what your cost structure is, the difference between variable costs and fixed costs, and how that might manifest itself. And your accountants, they should also have the heart of a teacher, can help illustrate how that's actually going to roll out in terms of the dollars, So again, I would involve your accountants. They can help you out on, some formats to really kind of develop and get a good solid estimate of how much this work package is actually going to cost you, either in time, labor, and hopefully monetize it, Now, here's the second part. We got our cost estimate is going to be the budgeting portion of it. Budgeting in our world is really just spreading that cost over some period of time. Now, this is what gets a little tricky. I am going to say that from the project manager's perspective, they should look at it from when the work is going to be done. When the work will be done. So if you're going to have, April, January, February, March, and you're going to have, $1,000 worth of work being done in January, $5,000 in February, $1,000 in March, January, February, March. What that kind of says is that you're going to start off slow. You got a whole bunch of stuff that's happening in February, and then very little that's happening in March. 1,000, 5,000, 1,000. The dollars should replicate the level of effort that is actually occurring. That is the way I would prefer a project manager to look at it. This is also the reason why you need to make good, solid friends with your financial accounting team, because your financial accounting team may look at it differently. Let's talk about finance. They or treasury. They may be thinking about cash flow. How the cash is actually coming in and out. What are your payment terms? How all that's going to actually manifest itself. So they may have a different. They may rearrange those dollars to better match the cash flow. The accountants, they're kind of looking back at the history of it, and they may be using cash-based versus accrual. If it's accrual, kind of matching the activities essentially, it should be fairly close to what you were kind of saying in the first place. Okay, but if they're just doing cash, then it's just really when the cash leaves the bank. So their numbers may look slightly different from yours. The total should foot. But the way that is being presented might be a little challenging. Again, I'm saying this from the PM's perspective. The way I would look at it is from an operational perspective, when the work is actually going to be done, when you actually receive the materials and things of that nature, more from a physical perspective. Again, your accountant and your financial people, they may actually change it around. Why? Because they're actually focused on different areas, So if you go ahead and set it up that way, how much everything costs, that's your cost estimate, determine your budget, that allows you to track. And you know what? We're going to talk about earned value and tracking performance. We'll do that in another video, hopefully you've enjoyed this session. Hopefully it kind of cleared up some areas. I cannot emphasize enough, make really good friends with your financial accounting team, and then just kind of think about it like a home project. You want to know what the total deliver cost is, and you want to spread it over some period of time in accordance to how you're going to do the work on that. Do that when we get to tracking it, easy day, as we kind of move forward. Well, hopefully that you've enjoyed this session of John the PM. If you did, hit the like button, hit the subscribe button. Helps us to be of service back to you. And in the meantime, may all of your projects be successful.